Hello and welcome to this short video on the 1, 2, 3 trading strategy presented by Phillip Capital Australia. Please note the disclaimer for this presentation, particularly noting that the information contained in this video is not to be taken as personal advice, so that means it doesn't take into account your personal circumstances, financial situation or needs. Please also note that the 1, 2, 3 trading strategy should not be taken as a recommendation to trade. So just an overview firstly on the 1, 2, 3 trading strategy. This particular strategy is based around a continuation pattern on the chart, and it takes advantage of an existing trend in the market. That trend can be up or down. In this particular video, we're going to be looking at an upward trending market and how the 1, 2, 3 trading strategy can be used to take advantage of a trend upwards in the market. It also identifies price consolidation before another move up or down in the market. So when we talk about a continuation pattern, we're already noticing an upward trending market. However, there will be times when the trend stalls and there will be a time of price consolidation, and that's where we can utilize the 1, 2, 3 trading strategy to take advantage of the next leg up. So we can see here on an actual chart of this is a chart of the Australian dollar versus the US. We can see at point 1, this is the lowest level on this pattern and it forms support. Point 2 is the highest level and it forms resistance. And then what would happen is we have the price action pull back down off that resistance into point 3, which is another low level but higher than level 1. So this suggests that even though there's been some selling, the buyers have taken control and the momentum is about to switch to the upside. And you can see also that this pattern occurs several times in an upward trending market. We have another pattern occur just above the first pattern as noted on the chart there. So moving into the entry point on this particular pattern, we can see that the entry point actually occurs at level 2. So you can see the line drawn across there. As the price activity breaks above the previous level at level 2, that's when we would enter this position. And we would take a long position, knowing that the price action is quite strong, there's momentum, and it's about to break up to the upside again. So that's our entry point on this pattern. As you can see, it's quite a basic setup, so it's very easy to identify in the market, and you can go back over old charts and try and find this particular pattern and become familiar with it, and also note how the price activity has occurred once this pattern is formed, and then you can then have a look at how you can actually trade this pattern going forward. So looking at the stop loss level, so now that we're entered into a long position above level 2 with strong price momentum to the upside, what we want to do is place a stop loss order. So what we do here is we would place the stop loss at level 3 or just below. Okay, so this means that if the price activity fails to create strong momentum to the upside and actually pulls back down to below level 3, that means that the bears have taken over. There's been a lack of buying momentum, and therefore we would want to be out of the trade at that point at level 3 or slightly below to allow a bit of volatility. So that's where we'd place the stop loss level. Now, depending on how much you want to risk, obviously would depend on the size trade that you're going to place. But what we're looking at is that stop loss level at 3 or below, slightly below. And then we would be out of the trade as the actual setup would have failed, and we can then move on to another trade. So a trailing stop may also be used to track the price higher if momentum is strong. So what we would do as a exit point at a later date, if we did see the price action continue to move up as we've seen in the chart here, we would place a trailing stop to follow that price activity, and then on the first pullback, then you may be taken out on your trailing stop in a profit if obviously it's above the level 2. So that's typically how we would play this strategy, and that is how you would also look to exit. You may want to put a profit take a bit higher depending on previous resistance levels, which you can do as well, but there's no hard and fast rules about your profit take. You can leave it up to your trailing stop. However, you can put a profit take at a desired level or a desired percentage gain that you would like out of this trade. So that basically wraps up the 1, 2, 3 strategy. It's quite a basic setup, as you can see, and the purpose of this video was really just to let you know that it is an easy setup to look for in the charts, and it can be something to get you going or get you trading in the markets as well. So feel free to contact us if you have any questions. Our contact details are on this slide here, and we'd be happy to help you out. Thank you very much for listening.